So let's talk a little bit about what this 529 plan alternative is. So really what it is we're taking a highly specialized whole life contract designed for the purpose of using cash value to pay for, in this case, college education or other things. And the key word here that's especially designed for that purpose, right? So I know when people, hear the word insurance, automatically they turn off and go to sleep. But if you're still watching this, we have to design the product for the objective, for the purpose. So if the purpose is accumulation of dollars to pay for whatever other objectives, then we can do that. So I'll speak of one great benefit that I benefited from personally, and then I'll let Shadi talk about the other benefits, which is the debt benefit. We as parents don't think of that, right? We think, oh, my kid's gonna go to college, everything's gonna be fine. But what about if we as parents do not make it? That's exactly what happened to me. My father passed away exactly 1 year before I graduated college. And I can tell all of you very honestly that without that debt claim, I would have never been able to afford to finish my college education. It was the debt claim that allowed me to do so. So building that debt benefiting as part of your financial plan is key, right? Once again, especially if the parents are the breadwinners, which in most cases they are, if not in all cases. So you want to make sure that if you don't make it, your kids will, right? And that's already built in. Now, there's additional benefits that Shirley will talk about, but that disability and death protection for the person earning the income and doing the savings is key. Again, you put the money in a 520 plan, you die too soon, there's enough money there. You're going to spend what you're going to spend, and that's it. But we can guarantee that if something happens to the parent, the money will be there. Again, we can guarantee that, which obviously you cannot do on a 529 basis. But let's talk Shirley about some additional benefits of the quote unquote whole life design for college education.
Okay, sure. So some of the other benefits to this 529 whole life alternative is that you kind of remove a lot of that risk of market volatility.
Mhm.
So instead of having us go into a 401k type of environment that where the market could go up, it could go down, and at the end of the day, you may not see any or very little growth. The 529 plan whole life alternative have guarantees that remove that market volatility. So your money is guaranteed to grow within that cash value, as we've talked about before.
Let me
You
make a point
remember?
about that, Shirley,
Oh,
before we
sure.
get going, which is very important. Sometimes you don't have the investment horizon, right? You were talking about earlier how, the baby is born, so the baby is 0 years of age, right? And now you want to start. In our experience, 99.9% of the parents don't start that day. They start 5 years into it, 10 years into it, sometimes even when the kids are already in high school. So what that means is that your investment horizon is very short. You don't have 18 years. You may have 10, you may have 5, you may have 2. So that's when the market volatility becomes an issue. If you want to make more money and you decide to take more risk and you don't have enough time to spread that risk, you may find yourself in a situation where you have significantly less money than what you actually put into the plan. And that could be a problem. So let's go to the next point.
Right. Thank you for that clarification. Um, the next benefit here with the 529 plan alternative is that in most cases, every case that I have seen at least, using this 529 plan through your whole life policy does not affect financial aid considerations. Things may change in the future, but as of 2024, I've never seen a 529 plan alternative or a whole life 529 plan that affects financial aid. And that is because any money taken from your whole life policy is not considered income. So that's another added benefit, is that even if you perhaps make too much for your child to qualify for federal student aid, you can still have this tax-free money that you can use, and it won't impact your income for taxes, and it won't impact their financial aid considerations either. This may be especially important for those families that are right on the border that they might disqualify from receiving financial aid if they make too much. Having this tax-free money here could be a game changer.
Exactly right. And you're absolutely correct, especially those families that are borderline, that they know they'll need maybe at least partial financial aid. That can save the student hundreds of thousands of dollars in interest and bank loans if you have the ability to get the aid and make up the difference with the whole life.
We've even seen some families who use their whole life policy kind of as a loan to their child. So they will take down a policy loan every semester for their child, and then their child can then pay them back and pay it back into the policy. So then maybe later on they can use that policy again for another child, or for that same child for maybe their first down payment on a home, for other expenses, a wedding, whatever else that might be.
Think about that as a legacy, right? A lot of families are going to have 40, 60, 80, 100,000 plus dollars going through educational institution. What about if you could keep the money working for you and your family? So what Shadi is saying is essential. Okay, well, instead of you going to the bank, Mr. Student or Mrs. Student, I'm going to lend it to you and you pay us back. But here's the beautiful thing about whole life, that when the student pays back the parent, quote unquote, that also builds a debt benefit on that contract. And who are the beneficiary? The children. So they're really building their own inheritance, so to speak, or in addition to their inheritance, that they will transfer the money to themselves in the future, 100% tax-free. So talk about, building a family legacy and, keeping it within the family. It's a great way to be able to do that, right? Obviously, the family has to coordinate this correctly. There are some rules they have to follow, but if it's done correctly, it's a massive amount of wealth that doesn't abandon the household. It can be retained by the family and transferred tax-free to the next generation. All right. So I guess the last thing that I would like to leave you guys. So we talk about some tax benefits. We talk about market risk. We talked about debt and disability potential and not affecting financial aid. I think we can finish up with what Shirley talked about: flexibility. You having control of your own money, you making the choices, whatever those are that you want to make, versus the state or the federal government telling you what you can and cannot do. So we're not anti-government here, but from a planning perspective, it's better if you have those options instead of surrendering them to a third party, right? The world is moving way too fast nowadays to make a decision today and then expecting that to still be true 18 years later. That is very risky, let's just say. So by providing that flexibility, in addition to everything else that we discussed today, that's a great thing. So any last thought, Shirley, that you would like to leave our listeners and viewers with?
One last thought as you were talking: if the very worst should happen to that child and you have no need for this money, the other benefit to this is that you could take this plan and you could make the beneficiary perhaps your child's shirt or your child's favorite museum, something like that. You could use this to make a donation in that child's name. So even if the worst does happen, these plans can still be very beneficial in remembering that child and in giving the world a legacy from that child.
Such an important point. And a lot of people might be thinking, well, that doesn't happen. Kids don't die that often. I will challenge you, if you're having that thought, Mr. Listener or Mrs. Viewer, to go to GoFundMe.com. Just go to GoFundMe and search for, donations requested for children, and you're going to see too many. Sometimes we just fail to plan, as they say. So having that protection, it can create a great legacy for the memory of that individual. So that's a great point, Shadi. Well, thank you for being here with me today and talk about your experience with your own family. And hopefully you guys watching this have found value in it. I look forward to the next topic. You guys have a great rest of your day.
Have a good one.
Bye-bye.